Hi there, Serial Trader here. Let's have a look at the major US indices heading into this coming week. And just starting with SPX here on the wave chart. So a little bit of an adjustment from the last video as far as the overall wave outlook. Certainly directionally, we're still expecting a resumption to the upside as this impulsive advance off the wave 4 triangle low does not yet count as complete. We need some more subdivisions to the upside. So just to review, we have our 1 up, 2 down, and then we have the next smaller degree, 1, 2, and then we have a 3, 4, 5. And this all works well because this 4 doesn't overlap with this 1. And wave 3 happens to be the longest in the sequence, which it most commonly is. And we have our wave 5 that within itself had a nice five wave subdivision. And now, just based on the length of time or the duration we've experienced in this pullback, I'd say it argues that we're now doing a minor wave 4 to match from this wave 1, this minor wave 2. So that's my rationale as to changing the short-term wave count to just reflect that, okay, I think it's a little bit larger of a degree of a pullback. So this minor wave 4 to match our minor wave 1 and 2. And obviously minor wave 3 under this interpretation would have peaked over here at our most recent high. So that all fits quite well from a structural perspective. And as far as trying to estimate when this wave 4 will pivot, it looks like it could basically turn any time, but just to get a bit of an idea. So the amount of time that was consumed in minor wave 2, if we just take that over here, looks like we have a little bit more time to consume before we would have consumed a equivalent amount of time, although that doesn't mean we have to match the amount of time consumed here. It's just something to be looking at as far as the potential timing aspect. And as far as the depth, just do a Fibonacci retracement. So if this is all of minor wave 3, its own 5 waves of minor wave 3, we'll just start from here. So from the bottom of minor wave 2 to the top of minor wave 3, we'll do our typical Fib retracements. And 236, 382, and 50% would all be obviously the 382 the most common. The 236 and the 50 would be similar in their commonality, although the 236, that's a very, very shallow retracement, and we're almost there. Okay, so we've almost done the 236 retracement, so that would almost meet the minimum requirement for this pullback, although more commonly it would go to the 382 or even the 50% retracement. And as you can see, even if we did a 50% retracement, this minor wave 4 still will not overlap with the top of minor wave 1, so that would still be quite acceptable as long as we didn't overlap with what's the level there, 2742.10, which seems fairly far away at this point, so I don't think we'll put pressure on those levels. So just looking at that, I'll get rid of the fib pull for now. Whenever this minor wave 4 does reverse and we resume this uptrend, we'll be looking for continuation in minor wave 5 of a potentially larger intermediate wave 5, and that could even complete a larger sequence at that, but we're not going to get ahead of ourselves. This shorter term outlook still favors continuation of the upside, but once we have a completed sequence with all the subdivisions, we'll have to start entertaining the possibility that a larger correction or something worse than that perhaps might be in the cards, but doesn't look like we're there yet. So still maintain a bullish bias at the moment. All right, and if we just go on to the 1 hour chart, so a little shorter term, you'll just see that pretty hard to label this at this point. You can certainly remark that it's corrective, it's choppy, it's overlapping, so it's definitely not an impulsive decline starting some new downtrend. But as far as trying to label every little subdivision, pretty difficult at this point. So I'd say just wait for it to start turning. wait for it to start breaking this lower high pattern, which it hasn't done yet, and then perhaps establish a bit more of a swing trading position with the low as the stop, obviously, which we may or may not have in place at the moment. That's kind of my thoughts there on the overall wave interpretation. I'll go with the candlestick chart on Thinkorswim. So from a candlestick perspective, well, we're definitely below the T line, and the 3T line has now crossed below the T line, so that's certainly not positive. We do continue to find some support off this 20-day simple moving average, although that's being heavily tested at this point. And certainly fairly long upper shadow rejecting these higher prices, basically just touching the T line then rejecting down on a closing basis. So if we do break here, we could put some pressure on this 50-day simple moving average. But you know, it's our stochastic oscillator could certainly fall deeper before it become oversold. So that doesn't show anything here. Like there's no candlestick reversal signal. Now if we put in a bullish engulfing and close above the T line, then I'd say we're likely back in business for further upside. But right now, no clear indication that this shorter term downdraft is over just yet. Certainly looking for a turn, but nothing here that's indicating one yet. All right. So now we'll go to the Dow Jones Industrial Average, and let's see if there's anything different about the Dow. And the Dow showing a little more relative strength, basically just meandering around the T line, kind of non-committal. Did a doji star on Friday, and essentially, I mean, closed a little bit below the T line, but essentially closed at the T line more or less. Haven't even tested the 20-day simple moving average, so definitely showing a little more strength compared to the S&P, but no strong signals here. Certainly not a buy or a sell signal at this point, just kind of going sideways, consolidating at the moment. So we'll certainly keep our eyes on the Dow. Maybe look for, you know, a test of this 20-day simple moving average if there's any additional market weakness from what we've already seen. Now we'll go to the Nasdaq Composite. Let's see if that's telling us anything else. So Nasdaq Composite. So this channel we've been in, it's been providing support for quite a while. We do appear to be closing outside the channel now and rejecting off of the 3T line and the T line. Let's get in closer here. So fairly long upper shadow, rejection of higher prices. 3T line clearly crossed below the T line and on a closing basis below both of them. So losing this channel is somewhat concerning for a bullish outcome, as that was the Elliott channel. 50-day simple moving average lurks pretty close here, so that may be in store to be tested pretty soon. Stochastic oscillator not yet in the oversold condition, so certainly it could drop further to get us into that condition. And just not seeing any buy signals here, so further weakness, at least short term, would not be surprising here on the Nasdaq. Obviously that would change if we had a buy signal and close above the T line, such as a bullish engulfing, but we don't have that right now, so very, very, very short term could see some more weakness, although I would suspect we're still going to have a resumption of the larger uptrend before any major, you know, selling will take place or major top will be in place. We'll continue to watch this though. Interesting that the Dow is actually now holding up better than, you know, relatively speaking, at least short term compared to these other two indices. Usually it's the opposite, but that could just be a temporary dislocation. Alright, so we'll go to the Volatility Index, see if we get any clues as to what's going on there. And okay, so definitely a little bit of a short-term uptrend here on VIX, although we haven't even broken the, you know, the most recent resistance level, which would have been 1686 here, and that's the one we set, oh, I believe it was August 15th, so the middle of last month. So it would be definitely a little more concerning if on a closing basis we got above this resistance level from the middle of August, although we haven't done that yet. And obviously If we make a lower high and then just start drifting back down again, that's still going to be quite a bullish condition for equities. Although it certainly will be a bit of an attention grabber if we do break the lower high pattern on VIX. That would certainly open up the doors to a little bit more heavy selling on the equity indexes there. But we'll continue to watch. Still no red lights here, but perhaps just some caution warranted before you get too bullish on any positions, at least short term. All right, well, that's probably good for now. Should be an interesting week coming up here, and starting in just a matter of hours at this point. All right, Serial Trader signing off.